All right, let's talk about something fascinating. We're going to explore a financial idea that starts with a pretty simple question. Can the spare change rattling around in your pocket actually turn into serious wealth? It sounds kind of like a fantasy, right? Well, stick around, because the answer might just change how you think about money forever.
So let's just get right to the heart of it. Can 100 rupees a month, we're talking the cost of a couple of cups of chai, really truly make you a millionaire? A crorepati? It sounds impossible. I mean, come on, but you're going to want to see the math on this.
Because, and this is the key thing to get, this is not a joke. It's not some get-rich-quick scheme you see online. This is all about two incredibly powerful forces, simple math and the absolute magic of discipline. Think of it as a system, not a lottery ticket.
So, here's how we're going to break it all down. First, we'll look at the promise itself. Then, we'll talk about a crucial mindset shift. After that, we dive into the magic of compounding, show you exactly how to start, cover the big mistakes to avoid, and finally, wrap up with the incredible power of time.
Okay, first up, the 100 crorepati promise. The whole idea here, the thing you really need to let sink in, is that the most important ingredients for building wealth are not big piles of cash. Nope, it's time and consistency. Seriously, how much you start with matters way, way less than how much time you let it grow.
Now, before we even talk about funds or apps or any of that, we have to talk about what's going on up here, in your head. For most of us, the biggest hurdle is psychological. So that shift in how you see things, that's the real first step. It's the most important one.
And I love this slide because it just reframes the whole conversation. We're not talking about some get-rich-quick scheme, right? That's all luck. It's unrealistic. What we're talking about is a get-rich-surer system. It's methodical, it's predictable, and it's based on the one thing you have total control over, your own patience.
And this just hits the nail on the head. That little voice in your head that says, "Piffed, what can 100 rupees possibly do?" That thought, right there, is the mental trap that keeps so many people from ever even starting. But the truth is, every huge fortune was built on a foundation of small, consistent habits. Every single one.
Okay, mindset check. Now, let's get to the engine that drives this entire thing, the real start of the show, the magic of compounding. This is where the numbers start to get really exciting, and you get to see how your money can literally start working for you instead of the other way around.
So what is compounding? It's actually beautiful in its simplicity. You put your money in, and it makes more money, your returns. But here's the magic trick. That new money, your returns, also starts making money. It's like a tiny snowball that you roll, and it just keeps picking up more snow, getting bigger and faster, all on its own.
So let's make this real. Here's our starting point. A simple, totally manageable investment of just 100 rupees every single month. That's it. That's the seed we're about to plant. And here it is, the big reveal. That tiny 100 rupee a month seed, if you just keep at it for 30 years, assuming an average annual return of 15%, which, by the way, is a realistic long-term expectation for equity funds, though it's never guaranteed, could grow to over 23 lakh rupees. Just think about that. That is the raw power of compounding. This table really drives the whole point home. Just look at how time changes everything. At 100 rupees a month, yeah, it takes about 40 years to hit that crore mark. But just by bumping it up to 500 rupees a month, you chop off 12 whole years. And at $1,000 a month, you could get there in just 22 years. The takeaway is so clear. Consistency and even small increases can dramatically speed up your journey.
Okay, so the theory is mind-blowing. I get it. But you're probably thinking, how do I actually do this? So let's shift gears from the why to the how. This is your simple, practical blueprint to get started, like right now, today. It is honestly this easy. Step 1, just pick a trusted mutual fund app. There are tons of well-known, reputable ones out there. Step 2, you gotta do the KYC process. But it takes like 2 minutes with your Aadhaar and PAN. And step 3, you just find the Start SIP button, pick a fund, type in 100 rupees, and set up the auto payment. Boom. Just like that, you're officially an investor.
But which fund should you pick? I know, it can feel a little overwhelming, but here's a quick and dirty guide to make it simple. If you're just starting and want something stable with lower risk, an index fund is a fantastic choice. If you're feeling a bit more aggressive and you're okay with more risk for potentially higher returns, maybe look at a mid-cap fund. And if you're a little more on the conservative side and you also want to save on taxes, a hybrid or an ELSS fund could be a perfect fit.
Now listen, starting is easy, but staying on the path, that's where people stumble. So let's talk about the really common mistakes that can totally wreck your journey, and more importantly, how to sidestep them.
Here are the big three. Number one, and this is the biggest, is panicking and stopping your investment when the market drops. That's actually when your money is on sale. Mistake number two is constantly jumping between funds, chasing whoever did best last year. And the third is just impatience, giving up because you don't see massive returns in the first couple of years.
And all of this brings us to what might be the golden rule of all investing. You have to forget about trying to predict the market's ups and downs. It's a fool's game, and nobody can do it consistently. Real wealth is built by simply staying in the game through the good times and the bad. Time in the market will always beat timing the market. So, to wrap this all up, let's look at the power of time through a real-life, totally relatable story. Because this isn't about complicated spreadsheets in the end. It's about real people getting real results. So our source tells this incredible story about a tea stall owner. Back in 2010, he started putting aside just 100 rupees a day. That's it. After 15 years of just quiet, consistent discipline, his savings grew to over 9 lakh rupees. He wasn't some financial wizard. He didn't try to time anything. He just gave his small savings a long time to grow. It just proves this system can work for absolutely everyone.
So we end up right back where we started, but hopefully with a whole new way of looking at things. You know, people are always talking about how investing is risky, but when you really understand the power of compounding and consistency, you start to realize that the biggest financial risk of all is doing nothing. It's just letting time slip away. So the only question left is, when are you going to plant your